Okay, let's start. Um, all right, so this is going to be a presentation, then an AMA. Well, not really an AMA, but ask me questions about this topic. If you feel like you have other questions, go ahead as well, but try to do that towards the end of the presentation. Some housekeeping. As we present, if you have any questions, write them in the group chat on YouTube. Um, and if I see them live, I'll try to answer it as we go. If not, I'll definitely do towards the end. Presentation is going to be about 45 minutes, maybe an hour. And then towards the end, we are going to have the questions. So budget about an hour and a half for this, maybe earlier if we don't have that many questions and so on. Okay, so why supportive skills? If you think about it, traditional analysis is focusing on certain investment skills that the everybody really focuses on teaching, and it's what the books are all about. But there are, in my opinion, supportive skills to these skills that make you better at analysis or decision making or business or risk management even. And I think there's a lot of issues today with younger analysts. For example, one of the things that a lot of PMs talk about today is that the young guys uh, need to develop their strategic, tactical, and business reference points a lot more. I often speak to young college students that are really good at traditional analysis, modeling, building PowerPoints, writing memos. But if you ask them, what is this business going to look like 2 years from now? Or what is the CEO thinking right now? What do you think what's going on with the board? Is they lack those reference points. And frankly, there's another issue, which is that most analysts could not operate a business for shit, really. Or they don't really know what it takes to run a business. And often that reflects in their point of view and their analysis of a business. And there's a quote by Buffett where he says, I am a better investor because I am a businessman, and I'm a better businessman because I'm an investor. And there's a lot of truism to that. But also, I think most analysts would probably wilt under the pressures of running a business and the responsibilities that it takes, even with a small employee base, and let alone a very large employee base. And I want to encourage analysts and PMs, because I find that there are also older analysts and PMs that they don't really know what it takes to run a business, or to know the intricacies and the inner workings of them. And we'll try to cover some of that, but also some of the supportive skills. Okay. So here are the traditional investment skills. Uh, Taste and what makes a great product or service. Idea generation. Analysis of fundamentals. Tracking, or, for example, we don't do that, but the use of credit card data to kind of understand what's going on with the business and other ways of tracking it. Field research, going into the field and interviewing customers, suppliers, and competitors of a business to be able to ascertain, to prove or disprove a thesis. The behavioral work, to try to understand, hey, what is going on psychologically, behaviorally, emotionally, in a stock or business that could elucidate an opportunity. Timing work, decision making, monitoring businesses that you're invested in or businesses that are in your shopping list, position sizing, exposure management, risk management, trading acumen. These are all traditional skills that other people have done a very good job at explaining it. There are ways to get an advantage at doing them. We try to have as much difference as possible in all of these things so that we have an advantage. And again, it takes a lifetime to learn these skills, but what I'm going to say is that you need to have supportive skills to these things. And I'll show you, for example, how uh, writing and communicating can help your traditional investment skills, or how the behavioral sciences will show that. And again, we'll cover that. All right, so there's two types of supportive skills. There's internal supportive skills, and then there's external supportive skills. Right, so internal supportive skills is stuff that has to do with the internal, with yourself. But again, this is not what we're going to cover, okay? Because I think we could do a whole other talk just about this stuff, but you kind of need to know that this stuff exists, and there are definitely ways of getting better at it, either practicing or reading about it. So self-scouting, self-awareness, and introspection. There's a great saying that I love is, if you don't know who you are, the stock market is a very expensive place to find out. And having self-awareness and introspection is very important. Time management, self-management, and energy management. When the young guys on this talk, or future YouTube watchers, it's not that important to you now, but as you get older, you start realizing that the return on time, self and energy management matters a lot more than you think. The earlier the better. The earlier you get these habits, the better. Health and longevity, super, super important. Not only for the obvious reasons, but for compounding. The longer you get to do this business, the better. Motivation, hustlerishness. I like to say that the best analysts, you say jump, and when they're in the air, they're building an airplane to go towards the objective that you pointed them towards. They're hustlers. Adaptability and flexibility. By the way, these last three, motivation, hustlerishness, adaptability, and flexibility, I'm in the camp right now that you can't train those. I go back and forth on these. You can train them, you can't train them. I think it could be a pre-selection. You either have it or you don't. In some cases, I've seen people develop them, especially, let's say, after a severe adverse negative event, like the loss of somebody that they love. But again, maybe, I was discussing this with a very dear friend of mine that suggested that you can probably show case studies of people that behave like that, with a go-getting ethos. But again, I think it's very difficult to learn these, but still, you have to be aware of them. And even if you are 1% like that, that can add a lot of value. And then, meta learning, which is learning how to learn, which is becoming more and more important, because in the modern environment, especially with artificial intelligence, learning and teaching are becoming the currency of the future. But again, these are internal supportive skills. This is not what the talk is about, but you have to mention them because these are actually very important, and we'll probably do another talk on these. But again, also, outside of skills, there are these soft um, uh, uh, skills, or the intangibles, as they call them in the NFL, which is work ethic, determination, persistence, personal purposeful practice, the ability to move fast, being true to your word, reliability, resilience, punctuality. These are all things that you can have also as attributes or skills that anybody can have these, frankly. Some will have them more than most, but these intangibles matter. All right. So, what are the skills we're going to discuss today? Sales and distribution, marketing, lead generation, um, hiring, very important, networking, the behavioral sciences, writing, communicating, and presenting, leadership and coaching, management, being a pathfinder, meaning being able to find competitive advantages, new ideas, new themes, and investing, strategy and game theory, creativity and invention, negotiation, and the modern skill, which the modern environment enables you to do more, which is crowdsourcing. Now, look, these skills, you'll notice, can support all the traditional investment skills that you have. And will make you a better businessman and better investor. And again, the people you admire, whether in business or investing, they have behaviors, and you can emulate those behaviors. There's a coach that I like a lot called Randall Stutman, and his practice is about finding the behaviors of businessmen and investors that work, and then adapting those behaviors to your own work, even if they are uncomfortable, and getting the reps at them. It's a very powerful way of behaving. And again, you need to have this sort of not invented here mentality. You don't have to be original at this stuff. There's no reason to reinvent the wheel. There's successful behaviors that are out there, successful skills. You can actually have them for your own approach. By the way, I have to mention that skills learned playing games are very important and can be used as analogies anywhere from games of chance like backgammon, poker, gin, bookmaking, sports gambling, to games of strategy, board games, or even video games. They're very powerful as analogies for both business and the investment world. And it's important also. I'm not going to speak about that, but it's definitely an area to explore. Often, if you're a really good games player, I used to do this, for example. One of the ways I chose to go into the investing world is I compared backgammon, which was a game that I was proficient at, and investing, and isolated the commonalities and differences. And I was blown away by how common they were, but the differences were also really appealing. You can do that with poker and investing, and it's very helpful. Doing that with video games and investing or business is actually illuminating. A lot of very strong modern businessmen, what they do is they have the mentality that we live in a game, in a video game, and they use almost video game terminology to explain what is happening in the real world. Okay, so sales, marketing, and distribution. This is going to be helpful for you in a couple ways. Three ways, I would say. The first way is analyzing the sales, marketing, and distribution of a company. That you are evaluating. Very often an analyst takes sales projections and puts it in his model, but never really says, hey, their distribution approach, their marketing, does it actually work? And it's very useful to have studied this stuff. There are other books on sales. These are the ones that I really like. Chet Holmes, The Ultimate Spin Selling. Give me 1 second, please. Sorry. The Chet Holmes makes a recommendation about the top 100 that I've adapted. I often tell analysts, Holmes says, look, you should take the top 100 potential customers that you have and systematically go after getting every single one of them. I always tell analysts that, hey, make a list of the top 100 CEOs that you admire and actually go after building relationships with them. You'll never get to the full 100, but if you get to 5 or 6, it's a home run. And then spin selling, which gives you an approach to sales that is very important to actually do. So, anyways, I jumped the gun. Forgive me. So, 3 things is going to be helpful for in studying sales, marketing, distribution. Analyzing a company's sales, marketing, and distribution, and having the ability to have a discussion with management about that. 2, helping your PM marketing. The marketing as a function is very important in the investment business, and there are marketing strategies in the hedge fund business. And 3, it's going to be helpful to you one day if you want to have your own hedge fund one day or your own investment business. We have a different approach when it comes to hiring. We don't hire analysts and train them to be better analysts. Our firm hires analysts that we think can be future PMs one day, and then we train them to be future PMs. Even if the analyst is never going to be a PM, it's much better if he can think like a PM in terms of stock picking and all the other investment skills, and also knowing how to communicate with a PM. And I want to mention that because a lot of these skills are about an analyst having a cultural impact on the business that he's working at. Actually, so the more I study sales, the more I start realizing the power of it when it comes to analysis. And I'll share a story. So years ago, I was studying a point of sale, a software business. And this one happened to be in the restaurant point of sale software business. And I was Googling restaurant point of sale systems. And I found this white paper. And to be able to get the white paper, I had to put in my information. So I start reading the white paper. Within 5 minutes, my phone rings, and I pick up, and somebody says, "This is so and so from this company shall remain nameless. This restaurant point of sale system. You're interested in restaurant point of sales. Could we come in and discuss these restaurant point of sale, our restaurant point of sale systems with you?" And I said, "Well, how did you get my information?" And he says, "Well, you just downloaded our white paper." And I was like, hold up. Nowhere on the white paper did it say the name of the company, except maybe on page 9, where they were ranking point of sale systems. And magically, that company's restaurant point of sale systems happened to be listed as the first company and its rankings, right? And it shocked me that this company actually had hacked and used the internet as part of their lead generation for sales. My next phone call was to the target company that I was studying initially. And guess what? They actually were not aware of using the internet for lead generation that way. And I don't have to tell you which one was the better of those 2 companies. It actually happened to be the one that was using the internet and the sort of content strategy to generate leads. And that's just something about sales, marketing, distribution. A lot of analysts actually don't understand that you can do, most management teams actually don't understand that you can do it either. Okay, let's move on. Hiring. Now, it's actually unbelievable to me that there isn't really a course at most business schools about hiring. It's one of the most important skills in the investment business or business, and very few universities actually cover hiring as a skill or a class. And by the way, if I am wrong, please, please, please send me the curriculum and the class, because this is a skill that I myself want to get better at. About a year ago, we threw out the rule book and how traditional investment managers actually hire. And I said, look, I'm going to take all the steps of hiring and study it, how it's done traditionally, and how we can actually do a better job and have competitive advantage in hiring, but also to solve the four problems of hiring in the investment business. Um, the four problems happen to be in hiring that in the investment business, it's expensive to hire, it's time consuming, it's competitive. You have a lot of the pods that are interviewing at the junior level in college today. And last, hiring is reflexive, meaning a great hire can multiply your business and a bad hire can destroy your business. And a hiring strategy has to solve for those four things. So one of the things that really helped me about hiring is this case study that we did on the NFL. If you actually look at how great NFL teams hire their players and how they select them, there's a lot to learn there. For example, some of the best teams have figured out how to financially evaluate each skill of a particular NFL position. And it's something that we've done in the investment business. So, for example, one of the criteria that we look at an analyst is a criteria that we call meta rationality. How much is that actually worth financially? Anyways, the three books that I've listed here, working backwards, chapter 2, I believe, on hiring is phenomenal. On how Amazon hires. I think they've solved a lot of the issues of hiring there. Of course, it's not perfect for the investment business, but there's some of the tools that they use that you can actually apply. Who and Top Grading by the Smarts. Both Brad and Jeff, I think, are phenomenal at hiring. Some of the tools they recommend, like the virtual bench, are very, very powerful. But again, getting involved here, for example, if you're an analyst and you went to your PM and you said, hey, let me help you hire, that's actually a way you can have a cultural impact on the business that you work for. And reading these books, practicing it, and getting good at picking talent is a skill that's going to help you across every single aspect. Sorry, let me step back. It's a supportive skill that will help every aspect of the traditional investment skills. Okay. Networking. Now, networking, you know, again, this is a skill that isn't taught very well in most universities or books or business schools, in my opinion. And in my opinion, you cannot be a great analyst or a great PM without a network. Uh, Networking is important for field research, for the behavioral stuff, for analysis of fundamentals. And it's a supportive skill that's going to for fundraising, for it's a supportive skill that's going to support every one of the traditional investment skills. For example, if you want to be a PM one day, there is no way that you can become a PM that is effective without a network of other PMs. I've rarely seen it done. Okay, I've discussed this in other talks. Uh, uh, what you need to understand is network components and how to build what is in this image a distributed network, because I think sociologists have identified that people that are highly effective, their networks are highly distributed. And what that means is that threats, opportunities, new knowledge, and a distributed network has a higher probability of reaching you versus a decentralized or centralized network. And the way that you do that is you need to have filter aggregators in your network. So people that filter information, contacts, and knowledge and aggregate it all in one place for you. You need to have what's called connectors. So who are the people in your life that traditionally have connected you to knowledge, contacts, and ideas? These are very powerful triads. So always when you, excuse me, when you introduce people in your network that don't know each other and combine them, that's actually the goal of networking. Networking is not one-on-one conversation, but it's actually taking people in your network that don't know each other and connecting them, and then setting them free. And then hubs. Hubs are places where, think about a conference like the TED conference, where very smart, knowledgeable, and highly networked individuals show up. And just by you showing up to that will increase the probability of you also being highly networked. You know, the saying, you are the average of the 5 people you spend the most time with, is very useful, especially when you go into the nitty gritty. So your health is the health of the average of the 5 people you spend the most time with. Your wealth, the same thing, and so on. And that can be used as a strategy for development. But again, this is very, very, very powerful. But also, I would add the last thing, which is hosting. You know, we've lost the skill of hosting in modern time. You know, for example, in New York, you know, there used to be salon culture where you would host people in your house, discuss topics. A lot of that has been lost now, except for very, very, very high levels. And it's important to be a host. And what I would describe there is a concept that I called host mentality. And host mentality is you should always walk around in the world that you are the host and everybody is your guest. That if you're the host, taking care of your guest is actually the right mentality. And as a host, you're papa, mama, protector, provider, and you protect and serve your people. Most people actually walk around the world as if they are guests. They have guest mentality rather than host mentality. And it's very important. And I'll share with you, one of my mentors is Bill Miller. And Bill, when he has an idea that he thinks is powerful and he wants to research it, one of the first things that he will do is actually host a gathering of other smart people so that they can discuss the idea together. I remember back in the early aughts when he did that, when he was analyzing Google's IPO and described this process to us in Michael Mobison's class for everyone to hear about how he came up with why he should be long Google, right? And this hosting is a very important networking skill. How are we doing on time? As usual, I'm running behind. Okay, the behavioral sciences. So you can look at my other talks where I talk about the difference between individual behavior and group behavior and behavioral finance, and also studying for group behavior, ecology, organizational behavior, systems thinking, chaos theory, cybernetics, and complexity. A new study for us has been studying the behavioral sciences, especially as it relates to selling and business. And I think one of the people you need to study for this is Rory Sutherland. I've been on a Rory kick for the last few weeks, and wow, there's a lot to learn. And I particularly suggest you read his book, Alchemy. This is going to be a very helpful skill and knowledge base to have when you're doing field research, but also a lot of the thinking that we do today is how do we survive and thrive in the age of artificial intelligence? And a lot of behavioral sciences are going to be very useful when it comes to that. Okay, writing, communications, and presenting. And again, when you speak to an older PM or analysts, one of the things they critique the young guys on is how bad the young guys are at communicating a thesis or an idea, and how it would be useful if the way they communicated would be cogent and without a word salad. I think a lot of young analysts sometimes try to show too much that they are smart rather and it becomes their explanation of a thesis or their thesis becomes too verbose. Whereas what they should do is, say it's a long, here are the three reasons why it's a long, here's our variant perception, and here are the next action steps, and keeping it concise and below 5 minutes. Peter Lynch tells the anecdote about how he used to have a kitchen timer that he would turn on when an analyst would pitch him an idea. And again, communicating these ideas, writing them is a very important part of being an analyst or a PM. And Bird by Bird by Anne Lamott gives you the writing process. Writing that works tells you your style. But working backwards has a chapter on the Bezos memo system, which is about writing a 5 to 6 page narrative that everybody reads at the beginning of a meeting and then everybody discusses. It's a very, very powerful process that I suggest that you institute in your business as quickly as possible. But let me mention a couple things about AI, because there's a lot of people are using these AI tools to write, and it's a mistake for a couple reasons. One is the process of writing is very analogic to the process of investing. There's something about putting something on paper and editing it and refining your thinking that is very analogic to the process of investing. And AI, in a way, circumvents this process or even hijacks it. And be very careful on using these tools. The second thing that AI does is, even if your writing isn't very good and you're using some of these tools to actually help you write, it's removing something extremely powerful, which is your style and authenticity. And there's a very powerful theme developing right now in the world, and that's called the rise of the authentic leader. So what's actually happening is people feel, with all the fake, the computer generated stuff that is out there, the fake stuff that you see on social media, there's a yearning for authenticity. And a lot of these AI tools, I think, are going to take away that. And as part of having, I always recommend analysts having a content strategy. I recommend businesses having a content strategy. It needs to be authentic. And a lot of the learning how to write and communicate should be about how to do that while preserving your own voice. It's very, very powerful. Okay, leadership coaching and culture building. And again, these are also very supportive skills for investing. These are the books that I recommend you read. I really loved Alex Ferguson's book with Michael Moritz. Now, it was mostly written with Michael Moritz. People that don't know, Michael Moritz used to be one of the head partners at Sequoia Capital, which is the venture capital firm. It's a very important firm to study for a couple of reasons. One, their hit rate at investing in startup or growth companies is through the roof. B, a lot of they often keep a stake in their companies after the company has gone public. And if you actually look at the performance of those companies, it's incredible. And C, they've come up with a lot of ways of thinking about business and investing. They're very valuable that even though come from venture capital, you can apply to public investing. In this case, I think that book is very powerful because he actually shows how Manchester United used to do things during Alex Ferguson. But one of my sayings is every book has a secret. And I think the secret to leading is that Michael isn't actually talking about Alex Ferguson and Manchester United. I think that secretly he's actually talking about Michael Moritz and Sequoia Capital. And also, there's an amazing anecdote in the end of that book where actually this has nothing to do with our talk, but still I love the anecdote, which is that Michael talks about how Jan Koum, the founder of WhatsApp, signed the papers to sell his company to Facebook outside that he sold for $19 billion. He had the Facebook representative meet him outside of the welfare office in Mountain View, where he and his mother had queued to collect their weekly food stamps. I love that anecdote. It's actually in there. Has nothing to do with my talk, but still, I love that anecdote. Anyways, all these books are actually excellent. I definitely recommend you study the NFL or other sports team to learn leadership coaching and culture building techniques. That literature is sorely lacking in the investment business or even in management. There are people that have tried to cover it, but they never really give you the tools and tactics. But it's worth studying. And by the way, whenever you're with a good CEO or any CEO period, always ask him these sorts of questions and accumulate those reference and mental models in your mind. Management, different than leadership, culture, building, and coaching. Here are the books that I recommend. Mastering the Rockefeller Habits, which is about the daily tools that you use to manage a business. Andrew Grove's book, Only the Paranoid Survive, that most people think that book is about paranoia. No, it's actually not. It's actually about how a CEO should manage strategic inflection points, which is very, very powerful. It's also a great analytic tool, by the way, because knowing when a company is experiencing a strategic inflection point is a great timing indicator for stock picking. And then this third, which is not a book, but a memo, which is by Value Act Capital on how boards should build better board books, which is the book of information that is not shown to, that is developed by management, but is shown to a board of directors so that they could have a strategic conversation. Excuse me. So that's also very powerful. You can add a lot of value with that. And there's a lot of legends, for example, about how Value Act helped Microsoft come up with a better board book that can really add a lot of value. And I think there are some YouTubes about this that are worth watching, where the partner Mason at Value Act discusses coming up with better board books and also reading these. Now, one of the problems of business and investing is recognizing opportunities early, but also recognizing problems early so you can squash them. And Mastering the Rockefeller Habits, he recommends a few tools. One of them is the Daily Huddle, which is a 15-minute meeting that you do every day with your team to talk about what they are doing that day, not to micromanage them, but to really pick up, or in this case, in the investment business, a lot of people use that daily meeting to talk about what's happening in the market, why is this stock down 5, why it's up 5, which is not very useful because the answer to that question is always supply and demand. But really, hey, what are you tackling today? What are the opportunities that you need help on and things that you need to have your team be aware that you're up to so that they could back channel and say, hey, I know you mentioned that you're doing these calls today to these customers in Ohio. Hey, I know a guy at this company. I think you should call him. And having a daily huddle like that can be very powerful. And I have to thank one of the best, in my opinion, strategists and business coaches that taught me this, Eben Pagan, where he recommends you do 3 daily rituals. He calls them the daily huddle, the daily dashboard, and the daily recap. The daily huddle that I just described, I think Eben picked that up from this book by Vern Harnish, which is Mastering the Rockefeller Habits. The daily dashboard, where you look at the metrics of your business. In this case, it could be revenue that comes in, cost that goes out, profitability, cash, and other KPIs that you track, that you graph them, and you and your team look at that on a daily basis. And the investment business, it may not be useful to look at your KPIs on a daily basis, but it might be useful to look at it on a weekly basis. But then you and your team, once you have these two, sorry, let me talk about the third, the daily recap, where every day at the end of the day for 5 minutes, everybody writes about what they did that day, no more than 1 or 2 paragraphs, should not be a word salad, what they did that day, what they need help with, any ideological or barriers that come up with, and they send that to the head of the team. And that way, after a few weeks of doing these, you start developing a sixth sense of the opportunities and problems that come up early in your business. It's very useful to know these management tools. Um, by the way, if ever you're analyzing a board, always pay attention to the board of a company, to the board members that are on the governance committee and the comp committee, because that is where all the power is. And when you're also, as management skills, conflict resolution, strategy, managing people, setting a vision, there's other books about that, and it's worth doing a study on this. Okay, Pathfinding. How long do we have? Okay, we're good. These books by Peter Drucker, where he actually shows you how to do studies on demographics, on industries to actually look for themes, dynamics, and ideas. Complexity by Mitchell Waldrop, which is really a book about a Santa Fe Institute. A lot of my mentors actually are either members of the Santa Fe Institute or are on the board of the Santa Fe Institute. And it's very useful to study modern businesses and modern business tools because a lot of them are based on complexity principles. And this book that I often discuss, which is The Age of the Unthinkable by Joshua Cooper Ramo, I would also add The Seventh Sense to that. But how do you find the new themes, the new paths, the new investments? That's actually a skill that you can work on and it's useful for idea generation. And it's also useful for research and field research and so on. I would also add this. It's extremely important for young people to travel as much as possible when they are young. Go to different countries, go to different geographies. I find that even analysts that are American have never really traveled outside of the East Coast and the West Coast, or outside of their own areas. And you need to actually see the geographies and the customers locally, not analyzing from your desk in New York, because there's a lot of nuance and a lot that is lost in translation when you're analyzing from New York. But also a lot of perspective gathering, pathfinding, comes from being a contrarian. A friend of mine, very smart investor, Quincy, he likes to talk about how he knew to get long when in 2009 in Q1, he went to an idea dinner and everybody was pitching a short and no one was pitching a long. Everybody was bearish. There a lot of these skills are going to come from being out in the field and doing field research, whether it's business field research or stock field research. But training your pathfinding skills is very powerful there. Strategy and game theory. Outside of Michael Porter, which even though I love his books, they're hard reads. In fact, if you want to really read a book on Michael Porter, there's an author, she wrote a book called Understanding Michael Porter that I think is very powerful. And that was recommended to me by Michael Mauboussin, actually. But outside of that, it's important to read strategy from different fields. In this case, intelligence, the military, and sports. And these are some of my favorite strategy books. The Art of Warfare by Sun Tzu, specifically this translation by Roger Ames, and then Treaties on Efficacy by Julian, which is a book about the difference between the way the West thinks about strategy and then the way the East thinks about strategy. And then a book by Machiavelli, which I first read about in Ryan Holiday's masterpiece called Conspiracy, which is about Peter Thiel's takedown of Gawker. And this book on Discourses on Levy, which is extremely, extremely powerful and a great book. A lot of game theory can be reduced to finding the weaker players in your space and beating the crap out of them. A lot of game theory often talks about game theory of competing with other smart, knowledgeable adversaries. Don't do that. That's bad for your self-esteem. It's bad for your wallet. One of the first lessons of professional gambling is finding weaker players and going to play with them, not finding the best players and going to compete against them. And I think a lot of traditional strategy can be reduced to that. There's a great military strategist that has a saying he says, if you find yourself in a fair fight, you haven't planned your mission properly. And I do agree with that. Okay, creativity and innovation. Now, these are recent books, but creative, and I like them, and I've learned a lot from them. But creativity and investing is very powerful. Coming up with creative ways of tracking a business, creative ways of looking at a company, or creative ways of creating a network around a company to be able to crowdsource insights about the company. This is a very powerful skill to learn. Now, it's important to remember that good artists copy and great artists steal. Okay, there's no need sometimes to reinvent the wheel. Somebody has a concept, go out there, take the concept, make it your own. Of course, give attribution if you can, but definitely use the work of other people to further your goals, assuming you're not breaching any laws, trademark, and all that stuff. But it's important to think about creativity. But creativity is also useful in analogy and analogizing. Think about the creativity of putting a man and a woman together, and out comes a child that you have to raise across decades. A lot of creating a business is creating a business in its infancy. You have to feed it, you have to nurture it, and then over time it becomes its own, it has its own sustainability. It's very important to think about creativity in that way, and those books are actually very powerful. Negotiating. Now, a lot of these books have been recommended to me over the years. Other very thoughtful people like Tim Ferriss have recommended some of these as well. Now, the book I would describe to you that I really like, especially the last chapter, which is How to Deal with Black Swans, is Chris Voss, where he recommends finding the black swan that is guiding the behavior of the person you're negotiating with. Excuse me. In this case, what are the forces, dynamics, psychologically, regulatory, or social, and that are guiding the person you're negotiating with? And are you able to understand how that is motivating him or incentivizing him and using that in your negotiation? I thought he did a really good job explaining that. Uh, but also, a lot of negotiation is about creating bargaining leverage for yourself. And that is something that you need to do upstream. And the story that I like on that shows that is a story that Ed Catmull talked about when it comes to Pixar, where he was with Steve Jobs, who was the founder of Pixar. And Steve said, we need to IPO Pixar, even though they had no revenue. And really, all they had was a potential movie, which was Toy Story in the 90s, that was or was not going to be good and hadn't come out yet. And Steve said, look, we need to IPO and raise capital now. And Ed thought it was premature, but Steve said, no, we need to actually do it, not only so that we can have money, but that's so that everybody knows in the investment community that we came up with the story, so that when we go to negotiate with Disney for our new deal, once Toy Story has come out, we'll have a lot more bargaining leverage, and Disney won't be able to squeeze us and get the best deal out of it. That's actually a very thoughtful strategy of doing things that are supportive to giving you negotiating leverage and solve that upstream. I've always liked that story, and it's a very powerful negotiation reference story. Okay, the last skill, crowdsourcing and collaboration. Now, that's crowdsourcing. I think it's a skill that's always existed. There's a great piece on creativity that actually shows that if you actually take great artists and look at their network, it had a massive influence on what they created. And it was so again, how networking can be a great supporter, but also because of crowdsourcing. Crowdsourcing on how to become a PM, for example, one process I always recommend people do is go to meet all these PMs and ask them, hey, I'm about to be a PM. How can I mess this up? What are the failure points of being a PM? And talk about every single category: portfolio management, decision making, position sizing, trading, risk management, and so on. And what are the failure points of each? Also talk about hiring, managing analysts, and so on. And crowdsourcing for that is very powerful. And again, Twitter, Instagram, and YouTube are very, very, very useful tools for that. And this is a skill that you can build. And it's powerful. So those are the supportive skills. Let's open it up for questions. We have about 35 minutes for questions. And let me make sure actually that everybody is still on YouTube. Okay, good. Okay. All right. So Yazan asks, how would you go about learning a company and industry from scratch? How do you build a circle of competence if you don't have one already? Great questions. You come to the right place. Okay. All right. So let's tackle the circle of competence question first. 2 points about circle of competence. And one, it's important to have one, of course, and it's important to act within one. But don't forget, somehow, for a lot of investors, having a circle of competence means that they never expand that circle. You constantly need to be able to expand that circle of competence. Okay. And building one in investing revolves around building a lot of the traditional skills that we discussed, let's say, uh, here, right? Um, and I think that uh, building, you should start first by studying the great companies that are out there. So if I was a rookie analyst, even before I went and started studying companies, I would go and read all the best investment memos on that have ever been written on Value Investors Club. Okay, and build a process where you read 2 to 3 of these per day. Even if you only did one per day, it'd be very, very valuable. You need to have developed the reps of recognizing, hey, what do people write about when they talk about ideas? That's the first thing that I would do to build a circle of competence. The second thing that I would do is, let's say you're interested in studying a company in a sector. You have to first read the last 5 years of annual reports and quarterly reports on the company, preferably read also the transcript of conference calls, and also do so for their top 3 competitors, their top 3 customers, if it's another public company, and also know who the ecosystem players are. So, for example, one of the things analysts always do is they focus on reading only about public companies, but kind of ignore the private companies that a public company competes against. Or they'll ignore, for example, the investors. So, who are the private equity funds that have trafficked in that public company? It's very important to know who these guys are. And if, for example, you went to school with somebody that works at that private equity fund, call them, take them out to coffee, and ask them questions about how they see the sector. That's actually going to build a competitive advantage for you because a lot of guys actually don't do that. They don't speak to private companies. To further deepen your competence, your circle of competence is, have you tried the product? Go and try the product. Go deeper. Have you done any field work? Have you actually, if it's a retailer, have you gone and visited the store? If it's a factory, actually, have you actually gone and visited the factory? We just came back from Mexico, for example, where we saw some of the best factories I've ever seen on the US-Mexico border, and it was illuminating just to see it. And now, whenever I look at a map, I actually have those mental models in my mind, and it's a competitive advantage because a lot of people still haven't seen what's actually going on in that border, right? So that's how you build a circle of competence. And again, it takes time and hard work, and there's no easy, hey, how can I do that in a day? It takes time to build, and that's why you need a daily ritual to actually do so. Once you learn in one sector, you can also apply that to other sectors. One thing I rarely recommend people to be sector specialists. I mean, there are sectors that requires specialty, biotech, oil and gas, and I think crypto. All 3 of these sectors are full-time work. You need to really understand what is actually happening. But still, we actually believe more in generalist investment teams than we do in sector specialist investment teams. I actually believe that generalist investment teams solve a lot of problems rather than sectors, but still, you should start with one sector and then take what you learn, build a circle of competence there, and then move on over time to develop a circle of competence in different sectors. Okay, I hope I answered your question. If I didn't, let me know. And B, yes, the video will be available, maybe not today, but once I edit it. It'll be minor editing. So Nero says, you mentioned earlier about Andy Grove's book, which was misunderstood as a book about paranoia. Yeah, the book, people always say, about that book, it's like Andy Grove says, it's about only the paranoid survive. But really, what that book is about is strategic inflection points. And one of the things that's powerful about that book is that he actually shows you what customers, competitors, suppliers, and the company management teams are saying to each other as the company is going through a strategic inflection point, and how the environment matters for that. So in this case, he goes into the examples at Intel in the 90s and 80s about the personal computer and how that was a very important strategic inflection point. And it's a very helpful mental model and reference point to actually have in your mind as you see new change happening in business. Nero asks again, what are some other books that are misunderstood as being about a certain topic but are actually about another? I think it's a good question. There's many. Um, I'm a big fan of taking, I don't know if they're misunderstood for that, but maybe they're not being used for that. So, for example, a book that, like this one, for example, which is a book that we love called Structured Analytic Techniques, which is a book about how the CIA does analysis of world events and and adversary countries, which is a book about intelligence gathering and tools, but really is a book about analysis as well, right? And I'm very I'm a big fan of taking things from other fields and applying it to investing. A book about coaching, like this book, for example, by Seth Wickersham, is Better to Be Feared, which is about the Patriots, specifically Bill Belichick, Mr. Kraft, and Tom Brady. A lot of portfolio management replicates being a coach. A lot of like personal, purposeful practice of a quarterback replicates what an analyst should be doing on a daily basis. So off-label usage, I'm a huge fan of that, and I think a lot of being creative in one field is copying what other fields are doing and then applying it to your field. All right. And B asks, how can we leverage AI without falling prey to the issues you mentioned with AI? How do you use AI? Really good question. I use Perplexity, just like a lot of other people. I'm a huge fan of it. I was a very close friend of mine showed me how to use it in Switzerland. And ever since then, I've been using it mostly as I study things. And I use it like having a very knowledgeable best friend that I can ask questions to. Um, and of course, all these tools have weaknesses. But let me go into what some of the weaknesses are. Um, One is all these AI tools require a quantitative signature and past happenings to actually come up with their answers. But anything new that's never happened or that has emerged can actually fall outside of what they see. So one of the ways to defeat the algorithm and the quant strategies is to be really good at the qualitative. Things like product quality, culture, a moat and whether it's expanding, management quality, competitive reaction are things that haven't happened yet. And if you're good at observing it happening and it hasn't been quantified yet, you can actually have an advantage over the machines. I think that's actually very important. Two, we're realizing that a lot of these quant tools are actually not analytical tools. They're actually portfolio management tools. I actually don't like my analysts using these tools. W.R. Deming And I think Rory Sutherland talked about this in one of his talks where he says, look, we try to optimize too much the part, not realizing that for the whole system to be optimized, sometimes a part needs to be sub-optimized. And when you give an analyst one of these tools, you're overly optimizing it and not giving the analyst enough constraints. So for example, I like my analysts to have constraints. I prefer a rookie analyst to not use street research in the beginning. Use the primary documents. Later on, once he's done a lot of reps using primary documents, he can actually know the weaknesses of Wall Street research, then he can use it, right? But now it's too, this lack of constraints is taking away a lot of analytical skills. That's my opinion. I could be wrong, of course. But there's something else. A lot of analytical power, decision-making power, and portfolio management power is the ability with constraints of imagining what's going and visualizing what's going to happen to a business or a stock. And I think a lot of these AI tools take away the ability to visualize and analyze under constraints. In the old days, you couldn't ask a question to the computer and it answers you. You had to go to the library, you had to go to books, you had to sit there under constraints and imagine it. And a lot of these tools, I actually think, take away that skill, which we're actually excited about because we're going to be competing with people that are using these tools. And I think it's diminishing them as analysts, but I'm very worried about it for my own development and for the development of my own people. I hope that answers your questions, by the way. Okay. Can you extend this to companies? For example, a classic example is McDonald's, a real estate company, and not a restaurant. So, again, I go back, I just did a presentation on leverage. I think it's a very important presentation. It was inspired by the work of Naval Ravikant and also the editor and author of a book called The Almanac of Naval. And one of the leverage that I recommend you have is contractual and structural leverage. So for example, the story of Ray Kroc, where he had problems that his franchisees were not as respecting his quality rules. He would give a franchise to somebody and then they would sell barbecue there and would not sell his own products. And he had no leverage in telling that franchisee, hey, stick to our rules, our model actually works, until a very smart guy realized and told him, hey, you're not in the business of selling burgers. You're actually in the business of owning the real estate and then leasing it to the franchisee. And end of the leasing and franchisee agreement, you actually say, hey, I actually have the right to evict you from the property if you don't stick to the quality criteria, right? And that's actually was a very powerful insight that sometimes you look at a business and you say, it's selling this, but what business is this business actually in? And that can give you a lot of insights about that. Okay. Question about your Mexico point from Nero. Would a public company that uses that factory have a competitive advantage over one who doesn't? Definitely. In this case, the ones in Mexico, it seems to be a sort of regulatory arbitrage where they're building things over there to be able to bypass tariffs if they were to ship it from different countries. And this is because mostly of the agreements that Mexico has with the US and so on. There are labor cost advantages that exist also, so definitely. By the way, Nero says, look, the only way to understand the magnitude of the difference is via field research. I find, Nero, that most investing should be done in the field. A lot of the insights you're trying to have about an investment, it's very difficult to develop these insights from your desk in New York, either because you do not generate the insight yourself, meaning it could be a customer that mentions something that happens to be insightful. I find that very often people share with you insights that they themselves may not realize how powerful the insight is towards money making. We've that have that happen many times. It was while speaking to a police officer about this product called Axon that we realized how powerful the Axon product actually was, and he himself did not understand the power of that. So it's powerful to be in the field and constantly, if as a skill, that's probably the skill that I would develop the most as an investor, which is the ability to do field research. Okay, how do you break into generalist role as a young candidate professional? Really good question. Generally, it's difficult to do so from school. You need to have gone through a process where you've gone through reps. So investment banking, accounting, where guys that do audit are pretty good at seeing a lot of reps, private equity, consulting, something where you've seen a lot of business situation over and over again, and you can break into that generalist way of thinking. Okay, Zach asked a question. Great points on the host mindset. What is the best way you have seen this apply in an investment business? Would you recommend hosting an idea dinner or something similar? Thanks for another great talk. Of course, Zach. Um, Always host idea dinners. Very, very powerful. As a suggestion, take care of ordering the food in the beginning. No one has to worry about that. Have the smartest guys there, and then you host the conversation. You try to keep everything on an economic. Is it a long or is it short? It's pleasant. Uh, you make it fun. I suggest a lot of alcohol and vino veritas. The truth comes out. Not to the point where everybody's getting inebriated, by the way, but to the point where people are sharing ideas. I find that sometimes when you go to certain idea dinners, everybody pitches the worst thing and hopes that somebody pitches their best idea. Um, One of my findings is that the best investment ideas, when you pitch them to people, everybody's gonna hate them anyways. So if you have an idea, everybody loves it. It's very rare that it's actually going to be a great idea. I remember a couple years ago, I was working with an analyst on an idea, and I told him, "Hey, if I'm going to go and pitch this, if everybody likes it, we've messed up, and we're not going to invest it." Everybody hated it, and it's been one of our best investments. So hosting idea dinners extremely powerful. But again, be the host. Okay, take care of ordering. Order food that people are sharing. It's communal. Okay. The At the end, one of the things that I find that works if you have 8 people is get 2 to 4 people to pay for the entire bill and everybody else Venmo those guys. Make sure that you email everybody in a group list or a group chat after that, so that if somebody is pitching it talked about an idea, you actually have a forum for somebody to actually ask a question, whether on email or WhatsApp or the others. Be the host. Optimize the experience for everybody. Manage conflict. If there's a bull on the idea, there's a bear on the idea, and it starts getting a little bit emotional, manage that. It's useful to understand that tension, but manage that. Be the host. Um, uh, that's definitely one of the ways to apply it in business. Running an offsite. The a very dear friend of mine has a couple of offsites every year that are must attend. You learn so much, and he takes care of all of the meals and has everybody bring a long or short and have discussions about it. It's one of my favorite events to go to. There are things that you can do as a host that are very, very powerful and supportive of investment skills. Are there any correlations from the study of leadership skills and tactics we can make when it comes to hiring? Both leadership and hiring are based on making judgment decisions. Thanks, Elise. So I think there are, um, so one of the things I suggest you do when you're hiring is to and potential candidates is look for qualitative excellence. Okay. So outside of, hey, are they good? You give them a case study and a work product to develop, and then they give it to you, and you're like, wow, that man was actually really good. Even if he's right or is wrong, his thinking is clear and concise, and he followed instructions, and it's adding value to you. Now, once you have that, what has the candidate done that is qualitatively excellent? For example, one of the young guys that I've interviewed recently was a junior triathlete champion. Okay. Do you know the amount of self leadership, discipline that it takes to be a triathlete? Qualitatively, that's really, really interesting. There's a legend about a great investor that in the late 90s, he went to work for Sears and was the top for the summer and was the top credit card salesman at Sears for the entire year while being an intern at Sears. Okay, that's interesting. That's qualitatively excellent. Now, there are other signs of leadership. For example, if he a team player on basketball in the NFL, and was he captain? Right? Did he show leadership skills there? And these are things that are qualitative, but it shows qualitative excellence and differentiates from other candidates. And that's something that we look for in hiring. But look, we have a list of criteria and qualities that we look for in an analyst. And one of the things that we've learned from the NFL is how to financially evaluate that. Not everybody has all of them. I think sometimes somebody has one or two of them, but we know how valuable they are and we know how to select it. But I think that that's something that hiring can teach you. And again, you not only need to study people that are good at hiring, but you need to practice it. It's something that you have to practice. Okay. All right, Sam Matla. I'm a complete outsider to the industry, but have previously founded a company. I'm a voracious reader of journalists. Are there any inroads that don't require degrees, higher ed? Um, I don't think you require higher education or degrees, frankly. Uh, my favorite and best analyst never finished college. I think what you require more. So one of the things that we look for in an analyst is, does he do purposeful personal practice? Did he teach himself how to model from going on Wall Street Oasis? Did he, you know, uh, do consulting work for other investors and develop a work product that I think was very valuable? Did he anywhere of his jobs show qualitative excellence? I think the quality of work matters to us more than degrees. One of the things that we look for when we hire is the same way that hiring requires having a variant perception on a stock, you need to have a variant perception on somebody that you're hiring. There needs to be a reason that other people don't want to hire him, But you've looked at it and you're like, yeah, that doesn't really matter. What really matters is the quality of his work and can he pick stocks or not. So many times, people are dinging analysts for reasons that I think are silly and have nothing to do with making money and having a variant perception. Um, I would probably correlate a lot of higher degrees with not being able to make money, or maybe you're in this business because you don't really like the stock picking business, but you actually like the money, and you needed to go to school to figure that out. Because the guys that really love this business, they start early. You know, the that's another thing that we look for when we're hiring is guys who love to pick stocks. Um, you know, some of my best friends, it's all we talk about. You know, we're at a bachelor party, we're talking about stocks. We're going surfing, we're talking about stocks. You know, we get together, it's all we talk about. I'm fairly single-minded when it comes to that. I can talk about stocks or portfolio management forever. You know, so the I don't think it requires a degree or higher education at all. Anyways, we're getting to the end. We have 5 more minutes. I hope I answered the questions. I hope this was helpful. Please send feedback. You know, put it on Twitter if you have any feedback. I'll try to answer there. We'll put the video up once we edit. And it's really going to be light editing, really. It's really editing the beginning so that for when it starts. And if you have any comments, these supportive skills matter, okay? This is very important, and there's too many analysts that are undeveloped when it comes to this area of their toolkit. Um, anyways, that's the end. I hope you guys enjoyed this and learned a lot from it. Thank you. Oh, SS, last question. Could you touch on position sizing? Um, what about it? So, okay, I'll talk about it generally. Um, because there's a few methods about it. Um, a lot of people use, for example, the Kelly criterion, right? So a Kelly criterion, the mathematical formula for it roughly is 2 multiplied by the probability of success of the investment minus 1, and that gives you a position size. So example, if you have 2 multiplied by a 54% chance of, of success minus 1, that gives you an 8% position size, right? But a lot of people have failed using Kelly for a lot of reasons because that requires you to be really good at estimating the probability of success of an investment. And most human beings are actually not very good at that. The second reason is Ed Thorpe has come up with an insight, which is that a half Kelly gives you 75% of the return with half the variance and volatility of results. So a 4% position, which is half of 8%, will give you 75% potential returns without the variance that can happen, the drawdowns that you can experience, or the massive upswings that you can experience. And I like Kelly. We use it as one of our tools, but it's not the only tool that we use when it comes to position sizing. The second approach to position sizing that we like is the capital at risk model. So we say, hey, I never want to lose more than 100 basis points in a potential investment. By the way, some people it's higher, but I'll use it for 100 basis points. So when you do your scenario analysis and you do your bear case, your base case, and your bull case. If you have a 4% position and your base case shows that you have a 25% chance that the stock might go down 25% and you lose 100 basis points, maybe you should not be in that investment, okay? Because you might be wrong. The stock might go down 50%. So the capital at risk model shows you a way of sizing things that you don't size based on the potential upside, but you actually size on the potential downside. And then the third approach, which is an approach that I built in my first hedge fund, we can't discuss the way we size currently because that's partner level information. It's also a competitive advantage, but I'll discuss a version of it. So my first hedge fund, we had a process. We said, hey, we have to study 5 things about a business: the business quality, the potential for the business to improve operationally, the variant perception, timing, and then valuation. And notice that we do valuation last because we think valuation is dependent on business quality, how the business can change, the variant perception, and a timing-based aspect of valuing a company, right? But then we said, look, if you think about it, those are actually also position sizing inputs. So what do we mean by that? Well, if your max position size that you'll ever take is, let's say, 8%, 8 divided by 5 is actually 1.6, right? So if the business has really strong business quality, okay, that's 1.6. If the potential for operationally improving is massive, that's another 1.6, you're at 3.2. And then the variant perception, everybody's missing it, no one gets it. Your point of view is variant. That's 4.8 because you keep adding 1.6. But now you actually have the inputs to be able to actually say, this is why I have an 8% position. Now, that's one way of sizing. A last way of sizing is, hey, I don't think these things should be equally weighted, these 5 attributes. And I would not use more than 5 attributes, by the way. I've made that mistake in my career to use too many attributes in investing. And actually, my business partner thankfully gave me that feedback. Better late than never. But 5 is about the most, is say, hey, business quality is really all that matters. So I'm going to, excuse me, business quality is actually very important. So I'm going to weight that 50%. So 4% is business quality, and everything else I'm going to weight, let's say, 1%, right? So if there's no business quality, but the variant perception is big, the potential for improving, and then you have timing and valuation, okay, you have a 4% position. But again, you need a sort of criteria to judge position sizing. And by the way, within your valuation, since valuation, excuse me, should be risk-based as much as it is upside-based, that can be one of the attributes and the criteria in your position sizing. And the last thing that I would say is Eddie Lampert, which is an investor I respect a lot, has a saying, says that different things matter at different prices. So that those criteria may change depending on actually what happens. Look, there are other position sizing methodologies. We've read a lot of the position sizing frameworks. There's a business that we like a lot called Alpha Theory that has a position sizing software. Very, very powerful. I definitely recommend PMs to either hire Alpha Theory or not. I think we've come up with insights on position sizing that really fit our own personality, style, and criteria that we use in ideas. But it's a good question. I don't know who SS is, but it's very important to think about. I know guys that are really good analysts, but terrible position sizing, and their investment results are not as good as somebody that's a shitty analyst and really good at handicapping and position sizing. It's definitely one of the competitive advantages that exists out there in the investment business that falls outside of analysis, gathering information, or even the psychological and the behavioral side of investing. Of course, you guys are welcome. Thank you so much for listening. As an extrovert, this is fun for me to do, but a lot of what we do is to try to add value to a community, both for altruistic reasons and selfish reasons. And I hope it was useful. Thank you so much. Okay. All right. Let's pause the recording.